So welcome to module number 2 of the crypto market. Now module number 1, we've previously just looked at the origin of cryptocurrency and where cryptocurrency started from, why it started and how it actually operates. And because we've looked at that, it's really important we understand today's monetary system as well, okay? The current state of our fiat currency. So in this module, we're going to be going over the types of currency, as there is more than one type of currency, the history of money and how money started, if you like, debasing currency, fiat currency inflation, which I'm sure you've all heard of, purchasing power, okay, so the amount of goods which you can buy with $1 or pound, the price of gold. Then we're going to compare the price of gold to fiat, and then we're going to go over very quickly a really important kind of prediction for Bitcoin as an asset over the next 10 to 20 years. So starting off then, the types of currency. So there's hard currency, which is currency which is backed by a commodity value such as gold or silver. Then we have fiat currency, which is like the US dollar or the Great British Pound. And then we have the best currency of all, in my biased opinion, cryptocurrency. Okay, now this is currency that is not controlled by a central bank. It's also not backed by any kind of commodity other than itself, and I'll explain what that means shortly. So in terms of the history of money, how did it all start? Well, it began with bartering, okay? Simple trade. You trade 5 chickens for 1 pig. That's bartering. Okay, it was an agreed value. Now this gets very, very complicated and confusing when there isn't a centralized method of bartering. It's simply the agreed price or value that is being exchanged between one individual and another individual. If they agree on a value, then the exchange can be made. Now to make this simpler, we have the evolution of precious metal currency, okay? Precious metal coins. So instead of trading with chickens and pigs and farm animals and commodities like rice and beans, we have precious metals, okay? So it is essentially a value system that is exchanged instead of the actual goods, okay? The currency is exchanged and then the goods are traded. Now, then somewhere along the lines, someone decided that precious metal coins were actually rather quite heavy. And so the gold standard was created. And the gold standard is essentially hard currency. It's currency that is backed by a commodity value. So the currency itself is not actually worth the value in which is being traded. Okay? It's simply backed by that value in a central reserve. And then somewhere along the way, fiat currency started, where a government-declared currency was decided that it will not be backed by commodity. It would be fiat currency instead. And that allows governments and central banks to print it as they please. Now, we don't like that at all. If you're into Bitcoin, and hopefully you will become into Bitcoin after this course, you'll really start to love the fundamental values of Bitcoin and start to really hate the fact that fiat currency even exists. Then we have the next evolution, which is plastic cards, your credit and debit cards. So now we've gone from precious metals to a gold standard or a promise value to paper value, to plastic cards, and essentially digits, online digits. So the bank will trade your balance, will credit and debit your account balance, depending on the items which you have purchased or the amount of money which your account has received. And you will be able to visualize that somewhere online, for example. And that leads me on to the next evolution, which is online banking. You can see these digits on your screen, and you can send and receive money digitally. So we've completely gone through a convenience change where you no longer have to hold precious metals. You don't even have to promise precious metals anymore. You don't even have to hold paper anymore or plastic. You simply use your mobile phone to send and receive payments, and also make payments, okay, with things like contactless, for example. Now, the next evolution, I believe, is the last evolution of currency. It's cryptocurrency. Because as great as online banking actually is, it's still run on a centralized system, okay, centralized monetary system. We've still got governments and central banks with too much control over our money. And what they are doing is essentially decreasing the value of our money. Okay, they've got too much power, too much control. So cryptocurrency is best of both worlds. It's online banking, essentially, with the backed benefit of the foundation that crypto is built on, which is the trust machine, blockchain technology, okay? That is why crypto will be the last evolution of currency. Now, in terms of decreasing the value of currency and printing more fiat currency, essentially what governments are doing at the moment is debasing their own native currency. Now, the actual definition of debasing currency would be used for precious metals. So your 100% gold coin would actually be made out of 50% gold as a precious metal and 50% non-precious metals, for example. And your currency would be debased by 50%. So when central banks print money to stimulate the economy, okay, now there's multiple cycles of the economy. There's short-term cycles and long-term cycles. And it's all dictated on things like interest rates, which the central banks decide, and the amount of money being printed into the system. Okay, again, central banks. It's all dictated very, very centrally. It's too centralized. And they're doing this at the expense of the value of your currency. So, fiat currency inflation. As the government and central banks are printing more and more money into the system to try and stimulate it, it's creating inflation. Now, inflation reduces your purchasing power of your fiat currency. Okay, so purchasing power is essentially the amount of goods you can buy with one single integer value, such as $1 or £1. It's also considered the silent killer of your money. Okay, so money which is sitting in your bank is at risk of inflation. Okay, and the decreasing purchasing power, which is married to inflation. And this affects everything from stock prices to weekly grocery shops. Anything with a price attached to it is affected by inflation. So let's just visualize this purchasing power being decreased and taken away from you. And let's go from the year 1209 to 2019. Now, this graph shows 2019 valued British pounds to the left, and along the bottom are the years. So let's say £2,000 in the year 1209 is now worth almost nothing in 2019, practically zero. Okay, and for example, since 1900, the Great British Pound has lost 99% of its purchasing power. Okay, £1 is now worth 1 penny. Now, if this isn't enough to scare you away from fiat currency, then I don't know what is. Okay, now that's why we're going to be learning about cryptocurrency, in particular Bitcoin. Now, instead of looking at a currency, let's look at an asset instead, like gold. So, as fiat currency has lost 99% of its value over 100 years, gold has actually increased by 100x, okay, against fiat. Now that's great because it shows that gold is an asset of supposedly finite supply. Okay, now if you want to argue about asteroid mining, we can. However, gold, in terms of an asset, has performed incredibly well against fiat currency. Now, what we want to do with Bitcoin, or what essentially Bitcoin does, is it solves the problems with currency currently, and it also solves the problem of gold not necessarily being of finite supply, okay, of capped supply, because in theory there are asteroids out there with massive amounts of gold on them, okay? Now in theory, okay, now I'm just going to talk about theory. In theory, that could be mined, it could be brought back to Earth, and it could completely destroy the value of gold, okay? There is potential there for gold's value to go to zero, okay, as gold becomes too available, essentially. It loses its value. Now, in terms of Bitcoin, the solution to that is the capped supply, the hard cap on 21 million coins. There will never ever be more. Okay? Especially the fact that some of those coins are lost forever, and I'll explain that in a later module. There isn't actually 21 million that can be traded today. It's even less. So Bitcoin is incredibly attractive in that sense, in comparison to gold. Yet Bitcoin can also be traded and exchanged at the speed of light, for example, as a currency. So we've got this unique mix of what I like to call an asset currency. It performs like an asset, it's traded like a currency. Now compare that to the fact that gold itself, because it is pegged to the price of the dollar, is going to lose 40% of its value over the next 10 years. All of a sudden, Bitcoin becomes very, very attractive, if it wasn't attractive in the first place. Now, to back this up, I just want to touch on something which MicroStrategy CEO Michael Saylor said about Bitcoin being an asset. And just briefly, Michael Saylor has invested 100% of his company's assets into Bitcoin. Okay, he's 100% Bitcoin. He is a massive, if not one of the biggest bullish Bitcoin investors on the planet today. And he has said, of a global monetary system worth $500 trillion, Bitcoin could capture $100 trillion of it. Now, if that were to be true, divided by the 21 million coins, Bitcoin could be worth $5 million at some point in the future. Now, that's 100x ROI from the current price. That's 100 times your investment at the current price. And that's why Bitcoin will dominate as an asset, because he believes clearly 100%, that Bitcoin is going to capture a market size which nothing else has ever done before. Because it is not only an asset to be bought and held, but it is also a currency. And if it becomes the global standard currency, we could see hundreds of trillions of dollars of market capitalization within Bitcoin. So at the bottom there, I've briefly said at this kind of price, it would move from an asset to a currency. Now, what I mean by that is it performs like an asset as it increases in value, yet the volatility, which I'll touch on in a future module, becomes incredibly small as the market cap increases, okay? So we start to see Bitcoin as an asset currency, especially at these incredibly high prices. And not only that, but if we are early in the game of Bitcoin, then the potential returns on your investment as well, again, this is not financial advice, could be as big as 100x. Now, I myself trust Michael Saylor. If you want to do some due diligence on Michael Saylor, please do. It's definitely why I am 100% bullish on Bitcoin, okay? This view that Bitcoin could capture markets which aren't just currency, okay? It's an asset class as well. So with all that being said, that's fiat currency covered. We've gone over the origin of fiat currency and the current day monetary system. And I will see you in the next module.